All right. Hey, guys, we are going to take a look at our usual crude oil, gold, silver, and a few currency pairs through the lens of Elliott Wave. Let's start with the crude oil chart. All right. So, all of last week, what we got was chopping in a range. The whole time I kept looking for 68.05 to break. So, that is a key parameter. And this could not get any traction in either direction. Look, it was a holiday week, lower volume, lower action, and what we got was a bunch of chop. All the more amazing that inside of the Professor Trades Club, Armando was instructing his followers to buy the dips here, just scalp long, scalp 20 to 30 pips at a time. If the folks that were doing that were making out very well, it is remarkable how my man Armando inside of his club, he can scalp the same range repeatedly and guiding you in. And with the Elliott wave, what I'm looking for is a breakdown. And I didn't get it at all last week. Uh, but I think it's remarkable that even when price doesn't go anywhere, I mean, this is a 4 hour chart. It looks like price isn't going anywhere, but dropping down to a lower time frame chart and basically using zones and levels like Armando presents. Now, in Elliott Wave, we call this zone a pivot zone. I won't get into the measurements of that, but there's a reason why I put this gray box there. It's not arbitrary, it's based on measurements. So when it lines up with Armando in the Professor Trades, it makes perfect sense that he was having his members scalp to the long side out of this zone for just 20 to 30, 40 pips at a time until this zone breaks. And it kind of looked like, I know it was exciting for some on Friday morning to feel like you hooked a fish, only to see zero follow through. And actually, it gave it almost all of it back. So, but from an Elliott wave perspective, um, this is not surprising to me at all. Looking at the 4 hour chart of Elliott wave, what my expectation has been for the entire week, even though it didn't play out, is at 68.05 will get broken down. When it does, there's a chance that maybe it's going to give you a local bottom down here just below the pivot. But it's also possible, going back down to this lower time frame, that it's going to keep coming and pick up. You're going to see several large 4 hour red 4 hour candles coming right through this, what we call the pivot zone. So in Elliott wave speak, on this lower time frame in purple, this is the pivot zone. On a larger time frame, which is these white fibs, white labels here, it's this wider pivot zone based on the same type of measurement that we take on the lower time frame, just taken on the higher time frame, but it's the same measurement. So the point is, this is where you would expect to see some support, and that's what you're getting for an entire week. But my expectation has been and remains that this will break down. Now, look, if I'm wrong, a parameter is 69.69 to the upside and 68.05 to the downside, right? So you've got a $1.63 range that are very solid parameters. Now, I know before I was saying this is a solid parameter, this top, and it did get above that top, but it did not survive a back test, right? Look, what do I mean? If it had, because it did break out above all of these highs, all week long, on Friday, it broke out of that. But if you were looking for, what you would look for is a back test, and you'd want it to hold that back test, but it did not. It failed it miserably and came all the way back down to the same zone that it's been in all week. So the best thing I can give you is parameters. So 69.69 to the upside. Very concerning for shorts if you see above 69.69. What shorts want to see is you want to see it lose 68.05. Now, I haven't put that level on this chart, but I'm going to put it on there right now. 68.05 is that low from all the way back last Tuesday. So that's the deal. And for targets, by the way, if we lose 68.05, it clearly opens the door to see the bottom of this pivot. But to get specific, if we lose the 68.05, the next meaningful target that Elliott Wave sees is 64.09, with the ultimate target is below 62. I know that's crazy, right? That's like $6. Yeah. That's what Elliott Wave gives you, is a unique uh, market context. It gives you a unique perspective. Uh, but since we're in the Professor Trades room, we're scalping, day trading using his signals and levels. But if you see price lose the 68.05 and you're doing well with a short, you may want to keep a runner on just to see if you can see 64. Okay. So that's the deal with crude oil. Let's hop over to gold. Now, gold, this is a really good example of when the professor trades lines up with something I'm seeing in Elliott Wave. So Armando posted that he was going to layer into a short a short swing trade on Friday morning, somewhere over here. So I took that trade, but then after dialing in some of this Elliott Wave stuff, measurements, basically, um, I agree, and I actually have a few open orders up here in case this wants to come back a little higher. I'd be viewing this as the start of this C wave to get you down below 2450. So this would be the wave one, which is 5 down, arguably 5 down. Could also be 3 waves. It's never easy, but what I'm viewing it as of right now is this is wave one, and then this is an ABC for wave two. That's why I'm allowing it to come up a little higher. If it wants to come up, I have open short orders up here if it wants to come back up. I mean, we're already in the money on this trade. To be prudent, uh, Armando advises just grab 20 to 30 pips right away and then leave your runner on. Now, in my case, I'm decidedly looking for a swing short in gold. So I'm going to leave, and I'm small size intentionally for this reason, to allow this to come back up, and I will simply add to my shorts. That is the deal with gold. So if you need a parameter, if it comes up, it's really this high over here. I really do not want to see it come up this high. I'm happy to see it come back up to 26.97. This is the front month contract. Happy to see it come up to 26.97. I will be adding to shorts up there. But the higher this goes, there is some risk that this is a 1-2 of a diagonal, but I don't think so. So parameter of sorts would be 26.97 on the front month futures contract. And the ideal target is 2,500. But I think let me put it like this. If I still am lucky enough to have a short on and we see 2,500, it's all coming off. I must always take gains at the 1618 of any degree that I'm trading for. In this case, I am trading this larger degree swing trade. So the parameters are keep adding to 26.97. I really don't want to be in the short trade if it keeps coming. It's going to depend. I'm going to see. Let me just see where the next yellow fib for a 3-wave move. 2,709. I mean, it's not. I think this is a good place for a stop and structure is way up here, 2715. Excuse me. So above here. Oh, and I suppose that's why I put my stop on this tool right here, right at the top of that swing high, because structurally speaking, you don't want to see it come up above there. And what you want to see is either it keeps going from now and picks up some acceleration, or just wicks up into here and it gets rejected. If that's really what I would like to see, is I'd rather see it just wick up into these yellow fibs and then get rejected, because then I'll have a larger short position. Okay, so that is gold. Silver, man, silver's tough. Silver is tough. It is possible that we struck a low on Friday, and silver has been tracking differently than gold. I mean, to me, I always track them differently, each chart on its own. I know people like to look at gold and silver like they're the same thing. They are not the same thing. So I trade each chart on its own. That's something I've learned from Elliott Wave. It has served me well, each chart on its own. So if it, for parameter's sake, honestly, this 618 of the entire decline, if this is the low, getting above this right here is key. I'm not saying it won't dip back down below here, but if this can get up above 33.44, I think it cements the idea that the low is in and we're getting a fifth wave higher. But it's not up to me. So it is possible. This is it is listen, anything is possible, but let me just give you parameters. All right, for right now, you don't want to see below this much below the 618. It can come down in here. If it gets below the 764, it becomes much more likely that we have not finished an A wave yet, and it's going to come down here to this 382, which is an ideal target for an A wave. So parameter wise, look at $30.40 as something that you'd want to hold. So if you want to, if you want to try to scalp a long scalp, I wouldn't do it from here. This was a short idea I had on Friday. I actually took it off, but I took the trade off, that is, but I left this here just to illustrate this idea of this being 5 waves up for the top of a wave 1. Price should not get below $30.40 if this is the case, and then it's gonna give you a proper 5 wave move that's going to take you above 33.44. So if price can hold $30.40 in silver, I think you may be good for $1 to the upside. But these are parameters. So if this keeps coming, there's another idea in here too, but I'm not going to complicate this. Okay. Simple parameters are $30.40 to the downside. You do not want to see below there. If that can hold, if this area can hold, then you want to see $1 higher before you see a meaningful pullback. I mean another pullback. So this would be where I'd be taking some gains. But we will inform you of the structure of price inside of the Professor Trades room. Okay, so that's the parameters. 30.40 to the downside. Let me just 30. Yeah. So here now I'm just drilling down. Let's say 8-minute chart here. It is possible that this is 5 up, and that's why I'm using this parameter down here, because if this is a wave 2, this is bullish. If this can come down and hold this gray box, that's bullish for silver. It is also possible this is just 3 up in silver and is working on a wave 4. If it is a wave 4, I've got this as an ABC. Now let me just show you how. We're always looking for 3-wave corrections in any instrument, and typically we use the yellow fibs for that. So if this is 3 up, then it becomes more likely that it'll hold somewhere in these yellow fibs, including starting at this higher yellow fib at the 100. It's totally possible. So these are clues. These are parameters on the nano basis. Yeah, it's fine if it keeps coming back down into these yellow fibs. That could be a wave 4 with one more shove higher for wave 5, which would target this box up here, 31.80. Okay. That's if this is a wave 4. And I'll adjust this box depending on where this bottoms. At the moment, I've got it at this low, what I'm calling an A wave. But, anything is possible. If that's all of wave 4 where I've got this A wave, if this is going to not make a new low here and then make a new high above the last high at 31.40, then this is the target box. If it does not make a new low below 31 and it gets above 31.40, then you've got a shot to make 40 cents in silver. And it's not going to move in a straight line. But what I'm saying is these are the parameters that I'm giving you. So you can absolutely follow the Professor Trades. He laid off a silver because of the ambiguity. I think that is incredibly wise, because last week I even stated in the room I don't have an edge in silver. Some weeks I do feel like I have an edge in silver, and some weeks I don't. Last week I didn't, and I still don't. But these are the parameters, okay? So that is the deal with silver. All right, this is a good place to just take a quick pause. I hope you like the parameters. If you're new and watching the videos for the first time and you're feeling like, yeah, this is good value to have these levels and parameters, give me a like. That'll encourage me to keep making these videos. And if you subscribe, hit the subscription bell, hit the subscribe notification so you will know when I post another video. But the real way to do this is come in and join us in the Professor Trades Club for less than $1 a day. It's a no-brainer. You're getting massive value from Armando, who is the professor. He's posting charts. He's posting actionable trade signals for scalper day traders. He's killing it. And he's always looking at whatever's the most highly likely setup in his club. That's what he's putting forth as trade alerts. And there's a bunch of great members in there. We're all supporting each other. It's the mindset that Armando is providing. Okay, this is my plug for Armando, the Professor Trade. So if you're new to my channel and you're getting value out of this video, come in and join the club for less than $1 a day. You're going to get this analysis, Elliott Wave, for free, and you're going to pay less than $1 a day to get Armando's analysis and his advice on mindset and how to trade grabbing scalps. I've never seen anything like what Armando does. It's pretty amazing what happens inside of his club on a weekly basis. It's improved my game dramatically as well, capturing gains more quickly and taking the daggone gains when they're there. And then I use Elliott Wave to allow for larger parameters, especially for swing trades. All right, okay, let's get back to some currencies now that I've finished doing a little plug there. So looking at the dollar, which of course is incredibly important, looking at a weekly chart, I just want to start with the weekly chart just to give you perspective. This thing is trading inside of this channel. It's trading up into this, what I'm calling a wave 3. And then now this is absolutely exhibiting the behavior of a wave 4. Overlap, chopping, not really doing net gain or net loss. It's just, it came down to this zone and it's just chopping. Very consistent with the wave 4. So look at these fibs right here. If this wants to come up as a larger A, B, C for wave 4, this is where it will come. If it's going to come back up. If the dollar is not done yet with this surge higher, if it's not done yet, it has got to hold very soon and get up into here. It could come all the way up higher into these yellow fibs here. But the way we discern that is by dropping down on a lower time frame chart and getting in the weeds with Elliott Wave. Now, here's one idea that this is just 3 down because it is 3 down. Forget my labels for a second. I don't want to confuse you with my labels. Just watch what I'm saying. 1, 2, 3. It is possible that this is the bottom of a wave 4 and that the dollar is going to resume its march higher, its strength coming back up into this ratio box. Just call it 109 just as a placeholder. 109 on the dollar. All right, that's quite a lot, right? But we don't need to just guess. We have parameters. So the first parameter I want to give you is last week's low, which happened in the middle of the night on Friday, or however you want to say it, 1 a.m. on Friday morning. If that low can hold, this is going to be very interesting, okay? Because then if this level holds, right, whatever that low is, the last low in the DXY from Friday at 1 o'clock in the morning, looks like it's 105,615. If 105,615 holds, and it doesn't have to be an exact level, just call it this area. 105,615, 105,500, somewhere right in here. If this comes back down again and holds that level, you're going to want to see it get above 107.13 because that's just the 618 of this move down. And if this going to do so, we want to see it do so in 5 waves. Okay. So these are, now I know these parameters are wide, but these are the clues that Elliott Wave provides and the market context that Elliott Wave provides. Now, I'm going to keep it really simple, but I know some of you guys are very adept and experienced with Elliott Wave. And I love having you guys watching my channel. So I know you want more. The guys that don't understand Elliott Wave fully, you just want the parameters. So I just gave them to you. Right down here, this last low, that has to hold. If that breaks, I think the door is open to see this come down into this zone down here. And ideally, it can come deeper than you might think, the dollar. It could come down here below 105 and get into this box. But let's take it one parameter at a time. Is it going to hold last week's low? Yes or no? If it does, then this is the parameter up here, 107.13. If it breaks that last week low and comes down decisively and convincingly, I'm going to be looking for it to come down to at least the 105, this zone. And ideally, it dips even lower than that. Okay. So this is going to be a huge clue. Now, this is where I would expect a meaningful bounce if we get down here. Otherwise, you can get a meaningful bounce from here. So parameters are our friends. Okay. So that's what I'm giving you. I'm giving you parameters. It's kind of like if this, then that. So, and this is going to affect a lot of the other currency pairs as to what this is doing here. So keep in mind that for now, this is just 3 down. But, if it breaks that low, then it's working on a bigger 3 down. Okay. And then the real low would be this 2 down here, somewhere around this 200 fib way over here. If price follows this path, then the top is in for the dollar for quite a while. That jury is still out right now as to whether the top is in for quite a while with the dollar, because the biggest clue, the best clue that Elliott wave provides is a completed 5-wave structure. And I don't mean on a nano basis. I mean on something more substantial, like a 2-hour chart or a 4-hour chart. And this is a 2-hour chart. So what you're seeing here is the internal structure in purple of the internal wave 3, which should be composed of 5 waves, right? 1, 2. Look at where this 3. Why do I have this here? Okay, because that's where the 1618 is in purple. But you see, there's a 1618 in white that goes with this degree potential 5-wave move down. So inside of wave 3 is another 5-wave structure. Elliott wave fully highlights the fractal nature of markets. Fractal meaning self-similar at scale. So therefore, wave 3 in an impulse is going to be composed of 5 waves. Okay, but here's the challenge. Is this purple? This is really why that question mark is there, because this could also be 3, 4, 5. You see, it could already be a 3-wave move down as an ABC for wave 4, this being wave A, this being wave B, and this is a 5-wave move completed for C wave. So this could be 3, 4 with one more shove coming higher in wave 5. You see how Elliott wave works? I know some of you guys get upset because I don't know the future. I know some of you guys think that markets are predictable, and some of you guys think that somehow markets are linear and that you can apply your human linear thinking to markets. That's a huge mistake. Nobody knows what's going to happen in markets. The best you can do is learn how to look at probabilities and develop a method or find a method or learn how to use a method that gives you a window into probabilities. Because if you don't accept the probabilistic nature of markets and you're looking for sure things and you're looking for absolutes, you're in for a world of pain. Ask me how I know. So I like the parameters. So I've just given you some, I think, solid parameters for the dollar to be aware of. All right. So we will see how this chart ages. What's another one? I don't want to talk too much more about currencies, but okay, here's EU, the euro dollar. It's the same thing that I was just saying about the dollar in reverse. Is the dollar going to keep going down? Is it going to bounce from here? This is kind of the same thing. So the parameters on the EU for the moment are, if this is going to come back down for one more low somewhere down in here, then we need to get rejected somewhere up in here, starting with this yellow fib for a 3-wave move for a wave 4. Just as I was explaining, the dollar could be in a 3-wave move for wave 4, and the dollar is going to get one more shove higher. The EU also could be potentially in a wave 4, but it's in the other direction. It's upside down. So we have the parameters. And the real one is this level right here, 10, what is that? 1068.26. 1.06826. This level right here If price cannot get above this level and gets rejected anywhere starting from now all the way through this region, if it can get rejected, I would expect this fifth wave to be composed of 5 waves, which, as you know, gives us an advantage because what we will do is if we can get 5 down from somewhere up in this region and then a bounce, we will short it looking for a completed 5 waves down. Okay, so one step at a time. Let's see how price is going to react to this zone right up in here. Okay, that is the EU pair. What's another one guys always like to look at? Wasn't it EJ? EJ, yeah. I don't want to talk too much about the EJ, but look, EJ is down here. It's in a support zone, right? It just reached support zone. It topped out where I was looking for it to do so, and it is now in a support zone. So looking for this to bounce somewhere from here. And as Armando might say, if it's going to keep coming, it's going to get below this level and back test it and then come down to the next level down. I think what would be more likely is a decent bounce from here. This is right in the zone where you'd expect a bounce. But, if it comes down and then back tests, it's very likely it's going to come down to the next zone. So that is the EJ. I thought I had a longer term chart on the EJ, but I must have accidentally closed it. Let's see, what else do I got for you? Oh, it was the UJ. Okay, UJ. Now, but way over here, I was wondering, is that the top? And look at this bounce. It came up to the 764 and got rejected. So my question is UJ, is it really done? Is this really the top? Or are we just doing a correction here and we're going to come back up into this box? At least one more nominal high. Now, this is a weekly chart, but that is UJ. So if we drill down on the UJ and get into the lower time frame, we are in an area of support. So either way, it is. I believe it is going to bounce. I'm looking for it to bounce, even if it's going to continue lower. Because one way to view this is that this is very near completing or has completed a 5 down scenario. So somewhere down here, it's going to bounce. And it's the nature of that bounce that's going to inform us as to whether this is a 3-wave bounce because we are beginning a long-lasting decline, or if this is just a corrective retrace and we are going to go back up higher. Okay, so this is the support zone for UJ. This is the support zone. Now, this is less than a 1-hour chart. It's a 55-minute chart. So let's see what price does early in the week in this zone. This is the bottoming area right down here for UJ. Okay, all the way down to 149. This is fine. In fact, if I see this coming down, that's my plan. Wait to see this coming down into this zone down here, because either way, it should bounce. Okay, so that's what I'll be looking for on UJ. All right. I think that's enough. I wanted to show you one thing about gold. I just want to remind folks and give you a good demonstration of the efficacy of Elliott wave on the longer time frames. It's much more reliable on the longer time frames. Looking at gold, we were looking for the A wave. It came down. It didn't quite make it as far as I wanted to see an A wave, which typically targets the 382 fib, which is down here. But because of the strength of this bounce, and it did get into what would be a reasonable target area for a B wave. And look at that reaction, man. This is a daily chart. Look at that daily candle in gold. And so that is the reason partly why we are looking to short this retrace, because this can very well be 5 down, which would be wave 1 of C. And so what we want to see now is a follow through of a 5-wave structure to get us to finish either. Now this is crazy. Either this could still be an A wave. Now look, this is going to blow your mind, but this is the way Elliott wave works. If this comes down as 3-wave, because it was shy of where you would expect to see an A wave. if this comes down and finishes off this C wave and gets down here, look at where the 100 fib lines up with the 382. The 382 is a typical target for an A wave. Okay. So if this is going to come down in 3 waves, the A, B, C, the 100 fib is a typical target. Well, that lines up. That's called confluence. So there is confluence there between this being an ABC correction, and this is a daily chart. There's confluence between this being an ABC correction for wave 4, but it could also be an ABC correction that just gives you the A wave. But for the purposes of this video, this is a daily chart. We don't need to get all into that right now. It's just something I'm alerting you to and teaching at the same time about how Elliott wave works. So you're getting parameters and I'm teaching at the same time. So the point is, the expectation is that this does not come up and make a new high. The expectation is that this is coming up correctively and will soon roll over, and we're going to catch the bulk of the trade that we really want to catch is just this wave 3. So if the wave 1 has already happened, if wave 2 is maybe not done yet, but if it comes up into here, the idea is to catch the third wave, which is the longest, most powerful wave in the structure. Now, this is where, so you use Armando's help to figure out where he's shorting from. And like we already did that. So we're short. He will take gains quickly because he's a scalper day trader. But he stated that he's looking for a swing short. And so am I. So the holy grail is to catch a third wave. And if this is really the one too, if it's done, or wherever it finishes from, we want to see a micro 5 waves down and then another bounce. You see? So it's fractal. So all we're trying to do is catch this initial 1, 2 of C. We're trying to catch this initial 1, 2 of C. And that is why I am shorting and Armando is shorting, just because he sees this structure. Look at the structure. I mean, I put this little skinny zone on there over here, and then I just keep dragging it over, and look how price interacts with that zone. Now, this doesn't have anything to do with Elliott wave. Let me zoom in on that zone. Look at the wicks. It's crisscrossing that zone. Then look at that. It's holding it, and then it held the bottom of that zone. Then it lost it entirely. And then now it's just peaking back up above that zone. So, and actually I didn't, on this chart, I didn't measure how far up has this retrace come. Let's do a measurement. Let's see how far back up that retrace has come. All right. Let's see. So that's the top. That's the bottom. I got the magnet on, so I'm trying to get it exactly on that low. And let's see where the 618 is. Actually, let me just do it this like that. Where in the heck is the... Oh, okay, it's over here. So yeah, it hasn't reached the 618 yet, the bounce. I'm measuring the bounce. So here's the, yeah, look at that. It just poked above the 50% FIP. This bounce, a typical target for wave 2, absolutely 50%, 618 in a really volatile instrument. It can come all the way up to the 764. This is typically more where a B wave targets, but a wave 2 after 5 wave decline absolutely can target the 50% or the 618. So I like the confluence in this area for a short trade, which is why I'm layering into shorts. That's why. And Armando sees the same thing, although he's going to take his gains, or maybe he already took gains. Although I don't think so, because he stated he's thinking about this as a swing down for next week. I agree. So there you go. I just wanted to explain that, and I wanted to really show you this longer time frame of how this is the unique feature of Elliott wave. When you understand how things work on this longer time frame, fibs, Elliott Wave's structure of price, the rules and the guidelines that Elliott Wave provides. Then we take that guidance on down to the lower time frames to try to discern what is most likely. And that is why we are looking to short in here. And that's why we are looking for this zone down here. And then, we'll have to discern whenever this finishes doing this correction, when it starts moving higher again, we're going to discern what is most likely based on the structure of price once it bottoms. You see? So we don't need to know the future. We just have to have good parameters. And, that's really the strength of LA Wave is the parameters that it provides, the risk management on the longer time frames. Really ideal. I think it's a perfect combination to go with the way Armando trades. We're going to find out this week with this gold potential swing short trade. All right, guys. Thanks a lot for watching. Thank you for the likes. And guys, thank you for the coffee. Greta, Derek, Peter, Raj. So many of you bought me a coffee. I appreciate it so much. Thank you. It's just an energetic exchange. It motivates me to keep doing this. Cool. I enjoy it, and I'm glad you guys are learning. Thanks for watching. Hey, questions? You want to see other instruments? Drop it in the comments. I'll do what I can. And I just appreciate you guys being here. Thanks a lot. Take good care, and I'll see you in the Professor Trades room this week. Bye-bye.